This is True Multifamily, the show where we dive in on what really happens after closing a multifamily property. We're going to expose the role of asset manager. That's a person who has a responsibility of seeing the vision, executing the plan, and managing people, budgets, and timelines, all to deliver returns for our investors. These are the real struggles, the real victories, and the real stories of asset management. Welcome back to another episode of True Multifamily. I am here with Kyle Mitchell of APT Capital Group. Kyle, thanks for joining me today.
Justin, how you doing? I'm grateful to be on. Thanks for having me on the show.
I'm so excited to have a fellow enthusiast of asset management on the show. I love what you guys are doing every Friday with your Asset Management Friday shows. And I'm just excited to connect with you on that level. And of course, Kyle put on the Asset Management Summit this past year, and that was a huge hit with basically every key operator in the multifamily space got to participate, and I loved it. I got to participate. Thank you for having me on the show on the conference, and it was a lot of fun. So Kyle, tell our audience, for those who don't know you, give us a little bit of a background about who you are and what you're doing right now.
Yeah, born and raised in Southern California, and I'm a multifamily syndicator that focuses on the Arizona market. So we own property in Phoenix and Tucson, and we look for value add B2C class workforce housing assets that either have some type of operational inefficiency or have, things like a longtime owner that isn't pushing rents, isn't really improving their property. We like to look at apartments like businesses. And so we like to identify businesses that are struggling that we can go ahead and put our touch on them and get them improving and running the right way.
Excellent. And talk to me about why, before we get into your True Multifamily story, why the focus on asset management, why the Asset Management Summit? Let's talk about that a little bit.
Yeah, so my background, my business partner's background is really in management and operations, and that's what we love to do. Is that there's so much of a process of getting a deal, finding a deal, raising money for it, and then getting it to the closing table. But really, your money is made when you're executing the business plan on the back end. And I love that piece of it, is managing the property, managing the budget, managing the manager. And that's what I did previously in my previous career. I was a regional director for a golf management company. So much like property management, but for a different asset class. So my day-to-day was managing people, hiring people, managing budgets, implementing systems, all that kind of stuff. I did that for 15 years. So when I found multifamily, I fit right into that space of asset management. And we really did, just like you, feel like there was a huge gap in this market where people are just not focused on the management side of it as much. I think for the last 10 years, you could have done almost anything wrong and the market would have taken you to a point where you were still profitable. That's different now. That's changing. And you never want to rely on the market to take your property to where it needs to go. You need to rely on your management skills and your systems and your plan and execute on that plan. And so, that's what we love to do. And that's why we're really passionate about it. That's why we did roll out the summit, because there's not a lot of people out there teaching others on how to manage these multi-million-dollar businesses and what to do when you do get in trouble or stuck. There's a lot of education on how to find your first deal, how to raise capital, which is all things that you need to do. But then there's another step to that, which is the execution of your business plan, essentially asset management.
Yeah, I like to tell people, it's great to pop the champagne when you close on that deal, but that's really when the work is just getting started. It feels like a sprint to that closing, but now you're starting the marathon and you've got to get to work here. We've got to manage construction and get returns for our investors. And there's a lot that goes into it, as you know. So do you have another asset management summit coming up?
We do. It's going to be in April. We're actually going to do 2 a year. We're going to do one virtual that will lead into a live event once all this COVID craziness kind of goes away. So that'll be April 5th, and it's a free event, and would love to have your audience join.
Absolutely. I'm sure there'll be some promotions around that, and we can put a little ad in the show for you guys, and be happy to do that. Great. So definitely check out that asset man. Is there a website up there right now?
Yeah, it's amsummit2021.com. And you can sign up. And again, it's free.
what's better than that, right? I love that. When you had asked me to be part of that, and I saw like, it's free. It's just education. It's just people just trying to help other people, spreading the good word about asset management, business operations. I really, really admire that. Can you just talk, before we get into your story, a little bit about how your company is structured? Are you like a full-time asset manager? Do you guys do other things? How many partners? Just give us a little overview there.
Yeah, so this is something that my business partner and I do full time. We also have a full time executive assistant on our team, and that's basically our team. So, between us three, we are deal finders. Actually, we do have an underwriter as well who does the initial underwriting of a deal, but we're the ones building the relationships in the market, finding deals, taking a look at it, raising the capital, and closing on them. And we also do our own asset management. We don't have our own property management, so we do hire a third party, but we do manage them. So right now we've got 3 properties and hope to do 3 or 4 per year going forward. So we'll definitely be adding to our team and need to add a full-time asset manager probably here in the next 6 to 8 months, I would say.
Yeah, that makes a lot of sense. And I love that that's your next hire, because it is critical to the success of these properties, and is a full-time gig. So let's talk about this deal that I know might be a little tough to discuss, because you said it's got some pain points in it, but our True Multifamily listeners absolutely appreciate it, and thank you. I thank you on behalf of myself and them for getting into it. Tell us about this property in Phoenix.
Yeah, so 128 units in Phoenix, closed on it just over a year ago now, and got it really pre-market. So not a lot of competition on the deal. I still think that we bought it right as it sits right now, but there's definitely some things that we could have done better to start to allow ourselves better execution of the business plan and be in a better position today. Now, COVID hit in March, April timeframe. We closed on it in November. And so we had only had about 4.5 months to stabilize this property, which is just not enough time. You typically need 18 to 24 months to fully stabilize a property. And so when COVID hit, it did put us behind the ball. We have not been able to turn over some of the residents that we wanted to. So that's one of the reasons why it's a little bit behind. The good news is that it's been cash flow positive every month. But we're still not hitting the targets that we wanted to achieve. And I think the thing that we could have done better is, they say hire slow, fire fast. And in this certain situation, we had a regional manager who we love. She's a really great person. She's been with the company a long time. She has a ton of knowledge. Unfortunately, you need a certain type of manager in there when you're turning over a property. There's a certain type of manager that is good for Class A properties that have, good residents and not a lot of crime and things like that. And then there's other ones that can really get down into the nitty gritty and grind it out and get the property turned over. And that's kind of what we needed. And unfortunately, the regional we had was not that type of person. And we tried to work with that person a little bit too long before we made the decision to kind of move on to the next.
Okay, got it. And we're going to pick back up there, but I've got a few things I want to break down and everything that you just said. For this deal, is this a property management? So you're using a third-party company, management company. Is this a company you use on your other deals, or was this a new company to you?
Same as our other deals, and we love this company, and we're staying with this company. We love their flexibility, their infrastructure, their willingness to work with us and customize things. But it is the same company.
Got it. And the same regional, or this was a new regional to you guys?
New regional, because different market, Phoenix and Tucson. So this is our first property in Phoenix, and so it was a different regional.
Got it. Okay. So for those that might deal in the smaller multifamily space, on the larger deals, you'll generally have a site manager who's responsible for the day-to-day of the site, but then you have a regional who sits over that person and multiple properties in the area. And I don't know how this company works, but for me, most of my regionals are who I speak to on a very regular basis. Of course, I interact with the site staff, but the regional is the one that's ultimately responsible from the management company to be the person that's going to help you be successful and execute your business plan. Was that the same for you guys?
Yep, exactly.
Okay, great. So you love the management company. You've already worked with them. You got a great relationship. This is a new regional to you. I do like that you broke down that not every regional, not every company, not every manager is a good fit for every type of property. And I think that's really undersold, is that, sometimes, yeah, you got to have a manager that is willing to grit it out. So tell me about this property. Was it crime? Is there, like, why do we have to do all this turnover? Are the tenants just not paying? What is the before picture, when you buy this thing?
Yeah, so the before picture was this property 5 years ago was in a very rough area. It is an up and coming area that has improved over the last 5 years, and you're seeing that. And the person who took it over did make some improvements and was starting to turn over some of the units. However, the market did so well. I talked about this earlier. The market did so well the last 5 years in Phoenix that they basically just stopped. There was no reason. They were getting the rents they wanted. They didn't need to improve the property, and they were a syndicator as well. And so when they sold the property, there was still a lot of riffraff in there that could have been taken out. They also had a property management company that typically works in the 20 to 50 unit space. So there was just not a lot of infrastructure and management going on at this property. So it was kind of laid by the wayside. It was performing. So it's one of those things where, revenue cures all evil, I say. And this property was making the revenue that they needed. And so everything else kind of got ignored and needed really to be fixed when we came in. So from the management perspective, the residents kind of were running the inmates were running the jail. As people say. And so that's not a good thing. The thing that we liked about the property is that only about 10% of the units had been upgraded. The rents were a couple $100 under market for sure. Exteriors need to be fixed, but for the most part, all the deferred maintenance items were done by the previous ownership. And it was in an area that we liked. As I said earlier, it was up and coming, and it's got a lot of new builds, a lot of properties were for sale, so we knew those were going to be turning over as well in that area. So it's definitely an area that we like and continue to like.
Okay. Yeah, that makes a lot of sense. So one thing I want to latch on to is, you said, revenue cures all. So you buy this property and there's revenue coming in, as you said. What else had to be improved? What were the other things that revenue was not enough for you guys that you knew that you had to come in and take care of?
Yeah, better quality residents is the number one thing. These residents, a lot of them were on Section 8. The rents that we were going to and the renovations that we were going to prices them out of it, which we typically don't keep any more than 10% residents of Section 8 for multiple reasons. But really, it was the class of tenant. These are C minus, D plus class tenants, and we want C plus, B minus class tenants in there. And so, there was crime, there's some drugs and things like that. And the goal was to get them out in the first 6 to 8 months. And like I mentioned, COVID hit month 4, can't evict anymore. And we're stuck with a lot of these residents right now that, we're waiting to turn over once the eviction moratorium ends.
Right. Have you found any creative solutions to getting those tenants out of there, even though you can't formally evict?
Yep. So what we do is we send out a letter, and the letter originally was created by the property management company. It's like reading the body of an email. It's very tough to see any bullet points or anything like that. So no one read it. So what we did was we said, here's what happens if you stay and wait until you get evicted. These are all the things that are negative. Your credit's going to be hit. You're not going to be able to rent. There's going to be a black mark on your rental history. Credit collections will be after you, and you still owe X thousands of dollars. And then on the other side, we say, if you move out by X date, we will wipe that slate clean and you can go rent from somewhere else, essentially. And so making it visually appealing to people. A lot of people will not read a whole letter with just a bunch of words. So you just make it bold, highlighted, and bullet pointed so they can read 2 or 3 words. And we've had 5 of the 8 to 10 residents take advantage of that now, which is great because on one side, yeah, you're not going to collect that back rent, but you're never going to collect that anyways. And so we want that inventory. We want to take advantage of that inventory that essentially, maybe you're 95% occupied, but if 10% are not paying, you're actually 85% occupied. And so we wanted those units back so we can turn them, get them online, and get them into a unit that is actually paying. So that's one of the things that we've done. We've done a couple other things as well, but that's the one that has worked the best.
I love that. That honestly, I'm taking that and I wrote that down when you said it, because that's something that we've communicated through our managers, and I know my managers have verbally or maybe written to them, but I have not seen the letter that they've written to them, and so that's such a great point about, just a block of text. People are not going to necessarily read it, but hey, I could spend an hour and have my graphic designer like put something together that just very clearly shows like some red X's and these bad things and the good things, and that might resonate with them. And that's something that we're still dealing with on a lot of our properties as well. So I love that tip.
Yeah, the biggest thing with asset management, it's trust but verify, right?
Yeah,
And that goes with, as an asset manager to your management company, you need to trust them, but you always need to verify what they're doing. And so we always do things like that, whether it's even emails to potential residents. We like to see the communication that they're receiving, because sometimes it just doesn't come across as professional or have the things in there that you may want to see as a potential resident. And so you tweak those things, and that can go a long ways. If you get 1 or 2 extra leases a month because of that, that's huge.
that's great. Really, really great tip there. Okay, so let's get back to the story. You've taken over. We've got 4.5 months before COVID. Obviously, COVID hits. What's the next struggle? What's the next domino to fall here?
Yeah, so I think the struggle for us was the property started off very well, actually. We were hitting our numbers, we were ahead of plan, and we were cruising along. However, in the back of our minds, we were thinking, do we have the right regional here? Well, they're hitting their numbers, so let's just keep going with it. And I still look back and not sure if we made the right decision or not. If the property's performing, you don't necessarily want to rock the boat and have turnover, because whether your turnover is from your residents or in your staff, that is the biggest cost to any business, is having that turnover. And if it's your own staff, you've got to replace someone, you've got to get them trained, they've got to know the business. That takes several months to get comfortable in that position. Then the residents need to get to know them and trust them. So you can be put behind 4, 6, 8 months very easily by not hiring the right people, even further if it's the wrong person. And so when COVID hit, we started to see some things that started to get unraveled that probably could have been avoided if we would have addressed the issues earlier. And so that probably was our biggest mistake. We've since replaced that regional. Again, I love her, and I think she would be fantastic for a different type of property, but just not for this one. It was a heavier lift, and so we needed kind of someone in there that could take that on. And also, we needed someone that is open to new ideas. Property management is an archaic business. Yes. And a lot of the people in the property management companies have been in the industry for 30 years. So this is how we've always done it. This is how we see it and all that. And we want new people who can bring a fresh new ideas, fresh new look to the property, and open to implementing technology and any new ideas. I mean, the one thing that I love about the multifamily communities that we're a part of is all of the education and all the ideas coming in. Every day I read something new about something new being implemented at a property that wasn't previously done. Well, if you're telling a property management company that has been doing it a certain way for 30 years, they're not going to want to move off of that. They're going to tell you, hey, this is what's always worked for us. And on the other end of it, the last 10 years, property management companies have really had it pretty easy. They have not had to do a lot of management or being creative to drive revenues, because the market's done it for itself. Now we're in the flip position where you have to be creative, you have to be proactive and not reactive. And unfortunately, most property management companies are reactive.
Yeah. Yeah, no, absolutely. And that comes back to having a strong asset manager that's going to networking meetings like you and I go to, that's staying up with the latest tech, talking to each other, so that we can come back to the property manager and suggest, hey, let's try this approach or that approach and see what works. One thing that I like to do is sort of experiment different reward systems on different properties. What is giving a $25 gift card to incentivize this kind of behavior do, or maybe giving away a TV, in a different market or different property, and just try to test different things and try to see what tech works. Are Google reviews really important, or can we get by with Facebook, or whatever other kinds of things we can try? It's nice to be able to experiment that way. And then I do find myself, even though our PMs that we've had are pretty, tech friendly, and, I probably as modern as you can be, I 100% agree with you. A lot of property management is stuck 10, 15 years, behind, and we've got to keep pushing them.
Yeah, and when you have the wrong manager, whether they're a good manager or not, the wrong manager for that property, that feeds down to your on-site manager, and then on your on-site leasing team, and then your on-site maintenance, and then almost your whole staff is, quote unquote, poisoned. And that becomes a very difficult situation to overcome. And now you've got to turn over your whole staff essentially to get them going back on the right track. And that does take time to kind of fix and resolve.
100%. You said that things started to unravel with this regional, and you started to get this feeling in the back of your mind like she might not be the right regional for you. Can you give us some insight into what those things were, what those clues were that gave you that feeling?
Yeah, as a manager myself, everyone has a different type of personality, whether that's a yes person or a always positive person or someone that's even too hard on people. And so when you're always cheering on your team, sometimes there needs to be tough love. Sometimes when there's a mistake made, there needs to be those hard conversations. And those hard conversations were not happening when things were falling through the cracks or things were being missed. It was more, hey, yay team, go team, let's keep doing this team. But this is the third or fourth time this is happening. Why are we saying yay team? This is like, hey, how do we get this fixed? How do we resolve this? Who gets held accountable? And if no one's being held accountable and we just move on, brush that under the rug and hope that it gets better the next time, that's what creates more and more issues, and it just snowballs. And so that's what I was talking about, where, if you're not actually managing your managers and managing your team, whether it's me as an asset manager to the property management company or the property management regional to their managers, that's a huge issue. And so they have to know that there's accountability tied to their performance.
100%. So okay, so you felt like this person was not holding their team accountable, not really owning up to the mistakes. Anything else that you want to cover on that?
Yeah, I think that's just the biggest thing, is
Yeah,
just they've got to be held accountable. And if they're not, there's just no one managing it. And so then they're left to do whatever they want to do. And things just, things slowly unravel when that happens, when there's no accountability. Your expenses start to go a little bit higher, and then your incomes drop, and then your occupancy drops a little bit. And so then it's really hard to pinpoint. As an asset manager, what we like to do is identify the bottleneck by implementing these systems. And so we try and niche it down to the very minute issue, not, hey, our occupancy is dropping. Why? No, it's like our occupancy is dropping because we're not calling our leads back within a certain time frame, or our communication is off, or whatever it is, and identifying that bottleneck. When you have all these different things going wrong, it's really hard to identify what's going on, and you have to essentially start at the root of the problem, which is the management of it, and then look yourself in the mirror a bit and say, hey, what do we need to fix from our end in order to get this thing going? And that's what we've done, and we've had to take a hard look in the mirror and make those decisions.
Yeah, absolutely. What was there any one thing that pushed you over the edge, or tell us about the experience of actually making a change in that position?
Yeah, what we did is, and one of the things that we love about this company is we sat down with the owner and had lunch with him. And this is a larger company with tens of thousands of units under management, and so that's one thing that we love. But we talked to him about our challenges, and as a group, we made the decision to move on and thought that there could be a better fit. It wasn't one thing that really triggered us. It was just the snowball effect that we could not find our way out of, and it was the only solution. And so, he spent several weeks kind of vetting people and thinking about who would be the right fit for that property. He even went by the property to understand it a little bit better, which is fantastic. It just shows the dedication that he has to his clients, which we love. Mm-hmm. And a couple of weeks later, we were introduced to our new regional, and we made the switch. And it's still early on, but so far we absolutely love her communication style, her way of thinking, and everything that we kind of were looking for, she's currently got.
It makes so much sense. And, when you have these little things, and it's not one big event, and it's not one huge drop in occupancy, or, it's like these little, I call it death by a thousand cuts. And, if you're not aware and sensing that it's happening, then you might look up 6, 9, 12 months later and realize, you've missed your mark on your numbers. because a water bill is too high or because the occupancy was a few points lower than it should have been. And 17 reasons why, but they all add up to really missing your mark. And so you've got to stay absolutely focused on all of that. And good on you guys for recognizing that uneasiness pretty early on and then monitoring it and then pulling the trigger and asking for help and to make that change when you needed it. So now, okay, we're still in COVID. You've got your new manager. Can you give us just a little resolution on how things are going or any positive signs or any other changes that have happened since bringing on the new regional?
Yeah, for me, from a business owner mentality, I like to look at things line item by line item to see where we can save, do better, improve, whatever it is. And that's kind of what we're doing now is we're taking a look at every line item, which we were doing, but we could not get the property management company to do it with us. And so we've made some changes on the payroll front on what we're spending on payroll based on, the demand. We're in the winter time now, so there's less demand on the maintenance side. So we are cutting some labor there to save on that. What can we do to save on the water bill? Now, the water bill with COVID has gone up substantially because more people are staying home. Yep. But even still, I'm not the type of person that likes to use that as an excuse. I want to make sure we're doing everything we can from an operations standpoint to be saving where we can. And then taking a look at the rubs. Initially this property did not have any rubs. We then implemented a flat rub system. We did a market survey and we saw that our flat rubs were actually under market by $15. So we increased them again. And now we're a year in. So we've gone through 100% of the residents as far as the rubs are concerned. And so now we're looking at bringing in ConService. I'm not sure if you've heard of that, but it's basically a service that bills the residents directly. And you can essentially collect or capture up to 98% of your utility bills. So during COVID, this is something that we're taking a look at. Our water bills are going up. There's nothing we can do to control that. But if we use a service like ConService, the residents will actually get billed for that. So now in their mind, they're going to be bringing down their water bill. So that does take another 6 to 8 to 12 months to implement. But by the end of next year, we'll hopefully have that rolled out. And now our utility bills will not be killing us like they currently are, and so that's something that this regional implemented or brought to us. And, I've heard of that service before, but we never implemented it. We were always a flat rub type of system. And this essentially is going to make up $50,000, $60,000 in income that we didn't budget for. We just had our flat rate in there. So that's going to make up some of the deficit. So things like that. It's just being able to have a conversation face to face with them and really come from a place of, hey, we all want this property to do better versus, we've never done it that way. That's, you're putting a wall up immediately and there's no way to get through that wall at that point because you're thinking it won't work. We love this person because everything we throw at her, it's like, okay, let's see if this works. And she'll say no to us, but she'll explain why. And we'll come to a conclusion on that, move on, and hey, what's the next thing we can do? And so, that's been really beneficial.
It sounds like you guys have found a good partner in this new regional manager. Before we wrap, I want to dig back in on that ConService real quick. Is that an individual meter they're putting on in each unit? How does that work?
So I'm still getting information on it, but essentially they bill back each unit separately, but it's not on an individual meter basis.
So it's like a preset ratio based on unit size and
or the number of people
Yeah,
number of people in each unit. I know they can do it multiple different ways, or you can just do it simply from the size of the unit as well. If there's different square footages, we're going to be doing it based on the number of occupants per unit. And then, you take the total bill and you kind of divide that out.
Got it. Now, I would just want to note one thing very important thing you said is when you're rolling out a system like this, anytime you're changing the way tenants are being billed, you can't just come in and say, hey, everybody, we're now going to charge you more. Now you got to be responsible for your water. That has to be in the lease. And so to your point about it takes 12 months, it's because every lease that comes up, that new clause has to go in the new lease. And so it will, on average, take you 12 months to go through all your leases and get everybody on that. So every month it'll get slightly better until month 12. you'll be back up and running that way. So.
Yep. And this is also billed in arrears. And so it does take 1 month to catch up once it does get implemented. So we're starting to put it in now, which is in December. We'll probably collect our first payment on this in March for the February billing.
Right. So another reason everything with utilities takes forever.
Oh, man.
We did a water, all low flow toilets and all that like months ago, and we're still waiting. Like, when's that lower bill coming in? Because it's like 2 or 3 months after you get the work done when you actually see that lower bill. So,
yep.
Kyle, this has been a fantastic episode. I have to thank you for digging in and sharing all the struggles that you guys had, but really a lot of actionable information on how to get out of it, recognize and get out of a tough situation. You talked about just buying it right. You talked about recognizing that the tenants are, I'm not sure the exact term you use, but you basically undesirable tenants is what we normally call them. And, but being in a property that's up and coming, you wanted the better quality tenants. You talked about verifying what the property management company is doing, a really great tip on how to communicate through COVID and the negative effects of if you're not paying rent. Because I know a lot of tenants think that they're going to be able to still skate through scot-free, potentially even into next year, into 21. And depending on, any new policies here with the next administration, who knows how long some of those moratoriums might go on. So that's even more important. And then you talked about, recognizing when there's a problem, and even if it's a small sign or multiple small signs, being able to have your finger on the pulse and take notice and make an action plan once that happens. So really, really great information. Let's end here. I'm going to give you a chance to promote yourself and everything you have going on, but let's leave us with your true multifamily tip for someone that is looking to get into multifamily. Maybe they've got a few small multifamilies they're looking to scale up. What is your one piece of advice that you might give them?
Yeah. So since this is focused on asset management, I'll give a piece of advice for asset management is you need to implement systems to identify bottlenecks, because like I said earlier, if all you're doing is identifying that your occupancy is struggling, there are 50 reasons why your occupancy can be struggling. And you need to create systems in order to identify the 1 or 2 reasons that it is actually happening. So by implementing these systems, you're going to be able to pinpoint certain things, and then you can really ask the right questions. It's not why is our occupancy down? It's, why is our leasing agent not getting back to these leads out until a week later? And then that is the right question. And now you've identified a bottleneck where you can go in and get a resolution, because saying we need to drive our occupancy up is not a resolution. It's not going to resolve anything. You're not going to be able to implement anything to get that going in the right direction. But if you know that a leasing agent's not getting back to someone on time, now you can make a decision to resolve that issue.
I love that. It's, not just the big picture, but the very, very granular. And that's how we make money or lose money in this business, is the very, very granular. And it could be that one change in how that leasing agent follows up with people that changes the whole projection of the property. And I could not agree more. Thank you. Thank you for that tip. Kyle, where, we talked about Asset Management Summit, please plug that again, and anything else that you want to bring up.
Yeah, just take a look at our summit. We would love to have you there. We do it free because we absolutely love talking about asset management and want to make sure that people that are getting in this industry understand how to manage these businesses so they can succeed as well. So that's amsummit2021.com. That's completely free. We do have an upgrade for $97 to get you into the VIP room where you get to ask each of the speakers questions. It's a smaller group, and then you get all the recordings as well.
Perfect. Awesome. Well, Kyle, thank you so much. Thanks for coming on the show, and we'll see you soon. Thanks again.
Yeah. Thanks, Justin.
Thanks for listening to another episode. Check out our website at truemultifamily.show. And if you have an amazing story to tell, share it on our Facebook community, and you might just be the next guest on the show. We're also on all other social networks. Just search True Multifamily. I'm really, really proud to have the show produced by our company, On Air Brands. Check us out at onairbrands.com. We also have an incredible, unique podcasting event that we would love for you to be a part of. Check that out at podmax.co.